Welcome, ladies and gentlemen. In this video I'm gonna show you how to trade gold in 2025. Let's go. As we know, market can trade in two directions. Market can trade up and market can trade down. So if I draw this example, this is an example of a downtrend, because as you can see, markets creating lower highs and lower lows, lower highs and lower lows. How can I know this high is a lower high? Because it's a lower than the previous high point. How can I know this high is a lower high? Because it's lower than this lower high point. Same thing with lows. How can I know this is a lower low? Because it's lower than the previous low point. Same thing with the bullish market structure. Let's say we got something like this, and we are creating higher lows and higher highs. How can I know this is a higher low point? Because it's higher than the previous higher low point. How can I know this is the higher high point? Because it's higher than the previous high point. So if I go on the charts, we can see that little bit better. As you can see, market was creating lower highs and lower lows, lower high and lower low, lower high. Then the market creates low, not lower low, because the low is at the same price as this low. So this is not a lower low, this is a low. And then market broke structure, which means this is now a not lower high point, this is a higher high point. So what I'm expecting after higher high point is a higher low point, which happened right here. And from this point, market starts to trend bullish. Right here we got another example. Price was trending up, then price broke structure. So broken structure is identified when price broke and closed under this level, which happened with this candle. So price was creating higher lows and higher highs. Right now price broke structure, creating a lower low. How I identify this low is a lower low, it's lower than the previous low. So what I'm expecting now is a lower high point, which happened right here. And the same concept, a lower low, lower high, lower low. What I'm expecting after lower low, a lower high. What I'm expecting after lower high, lower low. It's simple as that. So basically, this is gonna be the first thing. Direction, daily and H4 time frame. I don't wanna be going higher, let's say weekly, monthly. I don't wanna be going lower, let's say M30 and H1. It's because the daily and H4 works the best for me, and we are gonna be looking to take trades for a few hours and maybe for a few days. So the daily and H4 time frame are the most optimal time frames for it. So now the second thing will be key levels, support and resistance, supply and demand. You can call it however you want. So as we know, let's say we got this resistance here and this support here. And let's say price was trending like this, and yeah. Once price break this level of support, I don't want to jump to the trade like immediately. I want to wait for a retest. Always wait for retest. So price broke this level I don't want to sell here, not here, not here. I want to wait for pullback, which happened right here. And right here is the point where I want to sell. Same concept here. Price was trending down, then price broke this structure, broke this key level. I don't want to open a buy here, here, or here. I want to wait for retest again to price act as a level of support, and then I want to take a buy. So if I go on the charts, how I'm marking out this level is on a daily time frame and H4 time frame, and I'm marking them out based on the reaction what price is giving me from these specific levels. So as you can see, this level was level of support here. Then if I drag it to the right, it acts as a level of resistance once, twice, third time, fourth time. So that's the first thing, but the second thing, the main thing is look at the reaction what price is giving me. Price tap this level, huge move down. Price tap this level, huge move down. When price tap this level again, huge move down. Same thing when price, if I go down, if I go to the left, I can drag it all the way to the left, and as you can see, when price hit this level, look at the reaction. Huge rejection and drop like it was a almost 2000 pip drop. So this level is a level where I want to take trade from. Let's say here we got huge reaction, and huge reaction here. So let's say this doesn't happen yet, so I will mark out this level like this, and I know when price will get into this level, I will wait for my entry. So let's say price was at this level, push down, at this level, push down. Right now price was trending up, broke above, and again I don't wanna jump into the trade here or here or here. I wanna wait for pullback, which happened right here. Price was resistance, now acting as a level of support. And right now I want to take the trade from this level. That's the time I want to be opening the trade. Let's see another example. Okay, let's say this doesn't happen yet, and let's draw this level based on reaction what I'm getting from, because as you can see, price bounced from this level, huge push up. Price bounced from this level, a huge push up. Price broke this level, and look at this, guys. I don't want to hop into sells here or here or here. I want to wait for price to give me this retest, which happened right here. Right now I want to hop into sells, and look, price just drop from this level. So that's gonna be the second thing, basically. Key levels or support and resistance, daily and H4 time frame, and it's gonna be based on reactions what price is giving me. You know, because I don't want to mark some little levels which the reaction was low or no reaction at all. Let's say I mark, I don't know, let's say I'm gonna mark this level out as a level of resistance, for example. These reactions is not what I'm looking for, kinda. This I wanna see when price touch the level. I want to see huge reaction. When price touch level, I want to see huge reaction. Okay, so always look for the reactions what price is giving you. Right now, the third thing is gonna be Fibonacci. Again, I will show you the example. So basically, I'm drawing my fibs from the lowest point to the highest point, from the high low to the higher high in the uptrend, from the lower high to the lower low in the downtrend. Okay, so I'm gonna explain you these levels. Basically, what this Fibonacci tool is doing, it's just measuring the type of pullback what price is giving me. So for me, I wanna see at least pullback to 38.2%, which is our first level to take a trade from. Second level is a 50%. The third level is the 61.8%. Another level is a 78. Another one is 88.6, and the last level where I can trade from is a 1, because let's say we got a price push up. No, let's say I will draw it like this. Let's say price was like this, then this, and let's say this. And let's say I draw fibs from the lowest point to the highest point here, and price just pulled back around 69.8%. Let's say when price is at this point, I want to see price to pull back at least to the 38.2. If 38.2 breaks, I want to see it pull back to 50. If 50 breaks, I want to see it pull back to 61.8. If that breaks, 78.6, then 88.6. But if price breaks the 1, the Fibonacci is no longer valid, then the trade is no longer valid, and the direction will be switched, and the Fibonacci will be also switched to the bullish fib, to the right now bearish fib. So right now I'm expecting something like this. So I'm not gonna be using this Fibonacci. This is no longer valid. I'm gonna be using this Fibonacci from the highest point to the lowest point. Okay, so if I go on charts, let's say in this point price was trending down, so I'm gonna be drawing it from the highest point to the lowest point, from the lower high to the lower low, and after lower low, what can I expect? Lower high point. So price just was pulling back, broke 38.2, broke 50, stop at 61.8. I can highlight this level, and right now I'm expecting a lower low to be made, which happened right here. Okay, this Fibonacci is no longer valid because we broke structure. Again, let's draw another fibs from the lower high to the lower low, from the highest point of this push to the lowest point of this push. Okay, let's play it more. As you can see, in this example, price was give me this push, then price broke 38.2, broke 50, broke 61.8, broke 78.6, broke 88.6, and broke 1, broke 100%. So what's that mean for me? This Fibonacci is no longer valid. So what I'm gonna be doing in this time, I'm not gonna be longer using the bearish Fibonacci, I'm gonna be using the bullish Fibonacci. So as you can see, this is my new point A to point B. From the lowest point to the highest point. And right now what I'm waiting for it is at least 38.2 Fibonacci pullback. Okay, so right now the last thing, which is gonna be break of structure on lower time frames. So let's tie it together, yeah? Okay, let's start with the direction, which direction was bearish, then flip to bullish. Let's say I'll do it like this. So I got my direction, which is bullish. Second thing, key levels. I'm gonna mark out my key levels again based on reaction, what price is giving me. So I'm gonna mark out this level. I'm gonna mark out this level. And let's say I'm gonna mark out this level. Because I know I'm bullish, so these are the 3 levels I wanna take a trade from. The third thing is gonna be Fibs. So as you know already, from the lowest point to the highest point, from A point to B point. And what I want to see is at least pullback to 38.2%, which is my first level to pull back. So right now, as you can see, price is in a bullish trend. It's on a level of support, but it's not on the 38.2% Fibs at least. So I'm still waiting. I'm not taking any trade. Okay, so right now price pull back at 38.2%. What I'm gonna do is right now I'm gonna hop down on the lower time frames such as H1 and M30, and what I wanted to see here is to price to break structure from this downtrend, which is a country trend on the higher time frames, to be bullish and starts to trading up. So right now I'm waiting for price to break this high to be bullish. For me, okay, I would say we are ready to push up. So let's play it. And yeah, once I see this candle goes, break it, close above it, it's a break of structure for me. And right now I'm going to apply the same principles once again on the lower time frames. So the levels and the Fibs. So the good level I would say is this level to take entry from, and the good level looking left is this level to take entry from. This direction and this direction here. I know right now this is my major. This is a daily level of support. Price starts to push up from the level, break structure. So right now I'm bullish on a daily, on H4, on H1, on M30. So right now I'm just waiting for a pullback where to at least 38.2% on my Fibonacci. Okay, this was not 38.2%, so I'm not entering here. I'm waiting for price to pull back at least 38.2%, which happens here. It pulled back at 50%. So right now, in terms of my entry signal, I'm gonna be waiting for a engulfing candlesticks on the M30 and H1 time frame. So I'm still waiting. Price doesn't give me any signal yet. And yeah, right now as you can see, price giving me this engulfing candlestick. I got all my confirmations, so I'm entering buy. In terms of stop loss, my stop loss I want it to be under level of support or the level of resistance and under the lowest point price reach at the moment, which is this point. So let's say right here. In terms of targets, what I'm going to be targeting is negative 27 on my Fibonacci, which is the take profit of this bullish Fibonacci. Right now I got my entry, I got my stop loss, I got my target, so I just place a trade and I just wait. That's it. And price just went straight to my TP. So at this point, what I'm gonna do, rinse and repeat. This Fibonacci is no longer valid because we broke this structure to the upside. So right now, how I'm gonna draw it from the lowest point, from the high low to the higher high. What I wanted to see, at least pull back to 38.2%. I'm gonna do my levels, which one is gonna be right here. Yeah, looking left, and one's gonna be like right here. We got this reaction from broke retest, this reaction as well. So this is the first level, this is the second level, this is the third level. So right now we are waiting for a pullback. We are not gonna do much. We wanna see at least 38.2%. Okay, we don't got it, so we adjust our Fibonacci from this point to this point. Right now we got our 38.2% pullback, so we are waiting for candlestick, which happened right here. So we entering the trade, we placing our stop loss under the lowest point and under the levels of support and resistance, and the target is the same, negative 27. Okay, so waiting, and right now price stopped me out. Does it mean if I'm wrong, I'm switching my bias, I want to go sell? No. Why? Because price is gonna be bearish after we break the 100% of this Fib. Right now it's still valid, it's just making a bigger pullback. So right now I'm still bullish, I'm not switching my bias, even if I got stopped out. I'm still waiting for bullish engulfing to happen to take a trade from. And yeah, happen right here. I just enter right here, stop loss under the level of support and under the lowest point price reached, which is right here, and target is exactly the same, negative 27. Here I got stopped out. It happened, guys. Let's see what happened here. And from this point price just flew to my TP. So what I'm gonna do now, it's basically, guys, same thing, rinse and repeat. This Fibonacci is no longer valid because we broke structure to the upside, like this. This is right now my new higher low point. This is my new higher high. I want to see at least pullback 38.2, which I do my Fibs from the lowest point A to B. This is a 38.2, which is also the level. And right now what I want to see is a pullback, then engulfing candlestick. Okay, price not giving me 38.2 yet, so I'm not entering. Okay, right now I see the pullback. I'm waiting for the engulfing candlestick. Not yet. And yeah, right here price gave me my engulfing candlestick. Again, where I'm placing my stops is under the lowest point, which is right here. And my target, again, negative 27. Rinse and repeat, guys. If I play, price just playing around my entry, which is good. It's a waiting game from this point, you know. And price just not yet. yeah, price just hit our target. So guys, it's basically all time the same, all time rinse and repeat. Again, once I got my direction, what I'm gonna do key levels. Once I have my key levels, what I'm gonna do fibs. Once I have fibs, what I'm gonna do, break of structure on lower time frames. Basically, once I got these 4 things in sync, I just want to hop in a trade. I just want to place my stop loss under the lowest point price reached, under some level of support or some level of resistance. I want to target the negative 27 on my Fibonacci, and I just gotta wait. That's it. Okay guys, so if you find this video somehow helpful, let me know in the comments. If you want to see more of these videos, and yeah, as I said, it's basically all time the same thing. Okay guys, hope you enjoyed and see you next time.